The structure of the entire global financial system as we've known it over the past several decades is changing rapidly. The world is actively de-dollarizing, de-globalizing, and becoming multipolar. The Trump administration is fast-tracking financial changes, embracing Bitcoin and cryptocurrency, and sparking a new age of financial competition. Is Trump conducting a controlled demolition job on the current financial system to build a new, equity-based one that ensures the US dollar remains the world's reserve currency, diminishes the role of the Federal Reserve, a corrupt private central bank, solves the Triffin dilemma, where the US has no trade deficits and banks can scale liquidity without debt, increases bank competition, spurring innovation with better tech, lower fees, and ultimately brings us back to the pre-1913, pre-Federal Reserve era of free banking. A brand new digital financial era is upon us, and we need to pay close attention so we can take advantage of this once-in-a-lifetime opportunity by staying ahead of the curve and navigating the changing financial landscape together. Hello, I'm Crypto Casey, and in this video we are going to explore how the current financial system works, what changes are coming down the pipeline, how the future financial system could operate, and what we need to be aware of as crypto investors to protect and grow our wealth. Let's hit it. Please be sure to check out our sponsors, GoBabyTrade, Uphold, and Crypto Wallets, Tangent and Ledger. If you're not using AI, especially in crypto, you're behind and leaving a lot of money on the table. Make passive income and profit from the volatility of the crypto markets with GoBabyTrade, an AI-driven robotic crypto trader. Watch a video review here and join us every Wednesday on the free weekly webinar to learn more. Store your money and manage crypto with Uphold, a Web3 platform that actually holds our money in crypto, doesn't lend it out, is the safest way to buy, sell, and trade digital assets, and is connected to 30 underlying exchanges, so we get the best prices for crypto on the market. And make sure you own and use multiple cold storage hardware wallets. Tangent is super affordable, extremely easy to set up, only takes like 90 seconds, great for beginners. And Ledger Stacks and Flex wallets have extra security layers at the best discount in the market for our community. So scroll down and use links below to redeem all the special offers they have for us. All right, let's break down the current structure of the US financial system so we can identify and understand the new changes coming down the pipeline and how it will affect us. So the Federal Reserve is the private central bank of the United States, and it has two main functions. One, control interest rates, or the cost to borrow money, and two, to control the money supply. With interest rates, when the Fed views the economy as slowing and needs to be stimulated, they lower interest rates by making borrowing money cheaper to encourage spending and investing. And when the Fed views the economy as overheated, it raises interest rates, making borrowing more expensive and encouraging saving. Now with the money supply, the Fed controls it by buying and selling US Treasuries. When it buys US Treasuries with US dollars, those US dollars enter into circulation, which increases the money supply. And when it sells US Treasury bonds in exchange for US dollars, those US dollars are removed from circulation, which decreases the money supply. And these US Treasuries are issued by the US Treasury Department, and they are debt. They are just loans backed by the full faith and trust people, companies, banks, and other countries have in the United States government and economy. So here's the deal. US Treasuries are viewed as the safest global asset and are the backbone of the current financial system. And here's a visual representation of the current state of the US financial system. An upside down, inverted card house that looks like this. The lowest rows representing the less risky assets and the highest rows representing the most risky assets. From bottom to top, we have a few real US Treasury bonds here at the very bottom, literally the linchpin of this convoluted scam on which other assets and financial instruments reside, like rehypothecated bonds, which I'm not even joking, are US Treasury bonds that are on multiple banks' balance sheets, like one exact US Treasury bond that is listed on 20 banks' balance sheets, multiple paper claims to single US Treasury bonds. Wild. We have real estate, then mortgage-backed securities, and commodities like gold, oil, grain, and livestock. Next, stocks, bonds, equities, and finally, options, futures, and derivatives. Now here's the problem with this structure. One, it's based on debt. And two, when the Federal Reserve buys US Treasury bonds, it buys them with money that they literally print out of thin air. They add zeros to their Fugazi database and charge us, the US government, and us, their citizens, interest. We are now paying more on interest on our national debt than everything else. Military, defense, Social Security, all of it. The kicker. As we always discuss on the channel, US Congress actually has the ability to issue its own interest-free currency without having to be involved with the Federal Reserve's blatant scam. And also, the Federal Reserve is not a federal entity, it's not a government entity, it's a private central bank, and it has no reserves. Like, yeah, they have these US Treasury bonds and stuff, but they are using money they print endlessly. More recently, We've discovered that the US federal government also prints money out of nothing by fabricating payments and sending them worldwide. Check out this clip of Elon Musk exposing this scam earlier this week.
One of the things you told me about is what you call magic money computers at the treasuries. So tell us about it, because I never heard of that until you brought that up.
Okay, so you may think that that the government computers like all talk to each other, they synchronize, they add up what funds are going somewhere, and it's it's coherent. There's and that the numbers, for example, that you're presented as a senator, are actually the real numbers.
One would think.
They're not.
Yeah.
Okay. I mean, they're not totally wrong, but they're probably off by 5% or 10% in some cases. So I call a magic money computer any computer which can just make money out of thin air. That's magic money.
So how does that work?
It just issues payments.
And you said there's something like 11 of these computers at Treasury that are sending out trillions in payments?
They're mostly at Treasury. Some are, but there's some at HHS, there's one or two at State, there's some at DOD. I think we found now 14 magic money computers.
14, okay.
They just send money out of nothing.
The Federal Reserve and federal government increasing the money supply during certain times by buying US Treasury bonds. Banks are actually one of the main creators of money because when you get a loan for something, the new money is created out of thin air, thereby increasing the supply of money in circulation. So check it out. When new money enters the economy, it first goes to bankers, bureaucrats, and politicians. They are the first to reap the benefits of new money. This unequal distribution of money impacts individual wealth and is the key cause and driver of injustices in our modern society. Because when banks or governments give their friends money, they get to spend it on whatever they want, which is usually commodities and other valuable assets. And they are also afforded the opportunity to take advantage of arbitrage. Here's how. Since they get new money first, they get first dibs on using it to buy real estate, for example. And when they are all buying up real estate, the new money pumped into the real estate sector causes prices to increase. And by the time the money trickles down to regular people like you and I, we are unfortunately priced out. We've been seeing this since the money printer was fired up to prop up the economy during the pandemic. What else went up? Stocks. And all the bankers, bureaucrats, and politicians got their money first, bought stocks, and by the time we got our money, stocks, of course, were already climbing. This phenomenon is called the Canton effect. Whoever gets new money first has an arbitrage opportunity to use the money on goods, services, and assets before prices rise. Bankers, bureaucrats, and politicians are able to buy things at reduced prices, therefore have massive financial advantages over everyone else. So basically, inflation that happens from the Canton effect is pretty much a government-imposed, non-legislative, and regressive tax on our purchasing power as common citizens. This is how banks and governments enrich the wealthy, further impoverish the poor, and why the middle class continues to decrease over time. To learn more about the Canton effect, check out this video guide all about it by clicking on the link above. A brilliant little scam, isn't it? Alright, so that's the current structure of the US financial system in a nutshell. Now let's explore what could likely be Trump's secret plan to restructure it and how we can position ourselves in ways to benefit from it. Alright, so check it out. The United States has a massive, unsustainable spending problem and debt problem. And as interest rates have been at record highs the last few years, so has the interest on our national debt. It's absolutely out of control. So Trump needs to rein in spending, lower interest rates, and refinance our national debt. The only problem is the Federal Reserve doesn't answer to the government, including the president. The Fed would only start lowering interest rates under these economic conditions. Inflation is down and unemployment numbers are up, or if the economy slowed down and needed stimulation. With DOGE, the new Department of Government Efficiency, Trump is cutting spending and increasing unemployment with all the job losses. And while Trump's tariff war will cause inflation to increase, it's also part of a broader plan to bolster domestic manufacturing and protect US-based businesses. However, the downside is short-term pain, with struggling economies and global uncertainties. So is Trump systematically wrecking the US economy in order to force the Federal Reserve's hand to start lowering interest rates? Probably. And thinking back to how the current traditional financial system works, in times of uncertainty, markets flock to safer investments. With one of the safest being US Treasuries, demand for US Treasuries will increase all around the time the Fed may start lowering interest rates. And when they start lowering interest rates, they also stimulate the economy by increasing the money supply. And as we discussed, they do this by buying US Treasuries. So you see where we're going with this? Yes, refinancing the US national debt at much lower interest rates. And when this money printing or quantitative easing starts, that's when markets start rocking and rolling, and risk on assets like Bitcoin and crypto fire up. So as far as tariffs, it's more likely Trump is using them to just negotiate better trade deals, and once achieved, lowering or removing them. We shall see. So that is likely the short-term plan. Now let's talk about what Trump's long-term secret plan could be to restructure the entire financial system. First, if you haven't been taking advantage of these market lows and fire sales, the best strategy during uncertain times is to dollar cost average into positions, which we can start doing today. And the safest way to do it is with an Uphold account, a Web3 platform that provides us with a way safer, better option for buying and managing crypto than exchanges, as well as a way safer, better option for storing US dollars than banks. This is because all of our assets are 100% there, not lent out against our will like banks and exchanges do. We get the best possible price for Bitcoin and crypto because it's connected to over 30 underlying exchanges, which also gives us more liquidity when trading. And as we accumulate our Bitcoin to hold over the long term, the only surefire way to completely own, control, and secure it is with multiple hardware wallets. Tangem is super affordable, extremely easy to set up, only takes like 90 seconds, great for beginners. And Ledger Stacks and Flex wallets have extra security layers, and our community gets the best discounts on the market using the links below. Cool. All right, now for the restructuring of the US financial system. Trump is honing in on gold reserves, keen on auditing to confirm inventory that hasn't been audited in over 50 years. That should be interesting. And Trump has announced the creation of a US sovereign wealth fund, strategic Bitcoin reserve, and separate cryptocurrency reserve. So why does Trump want to focus on building asset reserves? To convert our debt-based fiat currency system back to an equity-based one like it was when the US was on the gold standard. So instead of just borrowing money at interest from a scam bank, the Federal Reserve, we can borrow against equity we have in our assets at a much lower interest rate. Check it out. Think of the difference between taking out an unsecured loan, so banks just lend you an amount of money that you just personally guarantee. Those loans command a higher interest rate because the lender is taking on more risk without anything backing it. Versus when you take out something like a home equity loan or a 401k loan, where there are actual assets backing the loan, they have lower interest rates because there is collateral behind them that the lender can take in the event that you default against the loan. So basically, when the US government issues bonds or currency backed by actual assets instead of the full faith and trust lenders have in the US economy, they have the option to redeem the bonds or currency for gold, Bitcoin, or crypto from our reserves, just like how it was back when the US was on the gold standard. And what's funny is this is one of the 5 things we explored back in November that Trump should do when he becomes president: convert the US fiat currency back to an equity-based currency. Backing the US dollar with tangible assets like gold, Bitcoin, cryptocurrencies, and other commodities would make the currency less susceptible to inflation, fluctuations in the global financial markets, all while preserving the purchasing power of the dollar over time and providing a more stable store of value for savers and investors. An equity-based currency could increase the public's trust in the financial system by providing a more transparent and tangible link between its value and underlying assets, offering some reassurance that the money isn't subject to arbitrary manipulation by central banks or governments. Because if people believe the currency is losing more value than the underlying asset, they would start redeeming the collateral. That would be gold, Bitcoin, or crypto, which incentivizes the government to be more fiscally responsible, putting an anchor on the amount the government can spend. Amazing. Now let's explore how the US may be on the cusp of bringing back free banking, like we did back before Woodrow Wilson was conned into signing the Federal Reserve Act in 1913. And to learn all about the history of the Federal Reserve and why we need to dismantle it, check out this video guide by clicking on the link above. Okay, so Trump's new US Treasury Secretary, Scott Bessent, said the US government will use stablecoins to ensure that the US dollar remains the world's reserve currency during the White House Crypto Summit on March 7th. And there are 2 ways they can do this. 1, with a centralized government-controlled stablecoin system, or 2, with a decentralized free market system where banks compete to issue their own stablecoins, sparking a new wave of financial competition. The last time we had this type of free banking financial model was over 200 years ago, and it was considered one of the golden ages of financial innovation. So if this is the direction we are headed, what does it mean for us? Here's the deal. Countries around the world want to create and use their own digital currencies to bypass United States sanctions. However, citizens in other countries still want US dollars, and stablecoins are the best way to meet that demand, as many people around the world don't have access to traditional banking. So right now, 95% of stablecoins are pegged to the US dollar. However, they are being issued by private companies like Circle, that issues USDC, and companies outside of the United States like Tether, that issues USDT, not by US banks. Trump wants American banks to start issuing their own stablecoins that are fully backed, regulated, and integrated into the banking system. And work towards this reality is already happening behind the scenes. Congress is working on new laws, and the big banks are already preparing for what's coming. Just days after the White House Crypto Summit, Trump signed an executive order directing agencies to rework banking and tax rules to favor stablecoins. So the Treasury is going to amend and rescind all previous guidance that hindered digital asset markets, and the OCC, the Office of the Comptroller of the Currency, will create a framework for stablecoin integration into national banks, which confirms that banks are about to get the green light to start issuing their own stablecoins. Earlier this year, Congress passed the Stable Act, which requires stablecoin issuers to maintain one-to-one reserves in US Treasuries or cash deposits, and the Genius Act, which grants national banks and financial institutions the authority to issue and settle stablecoins under OCC oversight. Trump wants a stablecoin bill on his desk by this upcoming August, stating, "We want digital dollars issued by American banks, not foreign companies and not radical bureaucrats. Congress needs to get this done." Major banks know this and have been preparing. JP Morgan already launched JPM Coin, a tokenized dollar for institutional use that is backed one-to-one by cash reserves, like the new rules require. Wells Fargo is exploring tokenized deposits, which are basically stablecoins. And Circle's USDC has been integrated into major payment networks like Visa. So what does this all mean? It means we are likely about to witness an explosion in financial competition, where banks with the best incentives will command the most customers. We will start seeing banking services and financial innovations explode on secure, transparent, blockchain-based technological foundations, where banks start competing to issue the best digital dollars with the fastest transactions, instant global payments, highest interest rates, most robust security, and more financial freedom overall, because instead of us being forced into one monetary system like we currently are if we aren't using crypto, we have more choices for managing our wealth and finances. Insane. The craziest part? This would greatly reduce the role of the Federal Reserve in our financial system, stripping away their control, power, and ability to continue conducting one of the most heinous crimes against humanity. And what's funny is this ties into one of the other 5 things we explored back in November about what Trump should do: dismantle the Federal Reserve. Again, Congress has power over the currency of the United States, including the power to coin money, create interest-free currency, and regulate its value. And it also has the power to charter banks to circulate money. And basically that's what is happening right before our eyes. We actually might have a shot at finally ending the Fed over the next decade. Super bullish. So taking a look at the current debt-based leverage scam upside down inverted card house that is our current financial system, after restructuring, it will look more like a fortified pyramid with underlying real assets and collateral at the base, like gold, Bitcoin, digital assets, and other commodities. On top of that, US Treasuries that are backed by the assets that allow us to refinance our national debt at way lower interest rates and restore trust, stability, and strength to the US dollar. And on top of those, we've got real estate, stocks, corporate bonds, mortgages, and on top of those, futures, derivatives, and options. We are in for some exciting times. So what's nice as crypto investors, the strategy is simple. Stack sats, buy Bitcoin. And another newer strategy I've been using over the past year now that has actually made me a lot more money than buying altcoins low to hopefully sell to someone else for a profit is an AI enhanced robotic crypto trader called Go Baby Trade. In my experience, it has performed like a set it forget it trading product, generating passive income pretty much every day. And more recently, I discovered we can also use it to implement the best DCA or dollar cost averaging strategy for getting into Bitcoin positions or other cryptocurrencies we're interested in building larger long-term positions in. Tons of y'all have been absolutely loving Go Baby Trade since we first explored it back in August. So definitely take 1 hour out of your life to join us on the free weekly webinar every Wednesday to learn more. Awesome. If you would like to learn about how Go Baby Trade works to diversify your crypto investment strategy, check out this video. If you would like to learn more about Uphold and how it's a way better, safer option than banks and exchanges for storing US dollars and managing crypto, check out this video. And to get an exclusive $1,000 discount off of a 3-year license for Go Baby Trade, click on the link on the screen. Like and subscribe for more. Be safe out there.